I think there's bigger upside in owning financials right now. Because financials are benefiting from AI.
Okay.
So they're the second order beneficiaries. Plus they're getting the green light to build on the blockchain, which could really make JPMorgan and Goldman's business models so much more profitable and change their multiples, expand them. So I think, yes, I'm still bullish on AI, but I actually think the financials are really one of the legs that drive us the next 12 to 24 months.
Tom Lee emphasizes that despite recent earnings disappointments and short-term pullbacks, Nvidia remains one of the most influential companies in the world, located at the very core of structural economic transformation. He highlights that even if the stock underperforms in the short run, it doesn't invalidate the overarching narrative. Nvidia continues to be a crucial player driving AI advancement and investor opportunity.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Investors are really anxious and Nvidia has not performed well the last few times it's reported. But the story arc there remains that is one of the most important companies in the world in the middle of the biggest structural change in the world economy. So I think Nvidia still is a great story. It really wouldn't change our thesis if the stock reacted poorly.
You feel like there's become a little more AI anxiety, as we wrote at the top? You know, from Sam Altman at OpenAI saying that, investors are a little overeager about AI. Meta's reorganized again. They've stopped their hiring. There was another report today that suggested some of these Gen AI models are failing. You think there's anxiety in this market about this trade?
Well, I think everyone's trying to get situational awareness. Like, is this inning 1 or 2 or late innings? Because we know there's been a lot of value creation and a lot of capital that's flowed in. And we know that Silicon Valley has seen a boom of companies with $100 million annual run rates, like in record time around AI. And a lot of people want to ring the bell at the top. But to me, it still feels really early because there's such a limited number of stocks that public investors can buy that represent a direct play on AI.
I know, but that could lead to bubble-like activity, right? When your pool of investable opportunities remains so small, all of this money rushes to a select few, and then they have to live up to all of that hype and give a great return on these hundreds of billions of dollars that are being invested. That's not a risk?
Well, it is a risk. I guess that's really the next stage of what we have to see is how does the market accept now adding to the roster of direct AI plays, beyond just Figment. And I think, if we look at the next 12 months, there'll be a bevy of IPOs, some really big companies that are later stage. But if they're bought and they produce good growth and their stocks perform well, I would still say that still means we're early innings.
That's still your favorite trade?
I think it's the most important trade, yeah.
I know it's the most important. I feel like that's legit. But is it?
I think there's bigger upside in owning financials right now. Because financials are benefiting from AI.
Okay.
So they're the second order beneficiaries. Plus they're getting the green light to build on the blockchain, which could really make JPMorgan and Goldman's business models so much more profitable and change their multiples, expand them. So I think, yes, I'm still bullish on AI, but I actually think the financials are really one of the legs that drive us the next 12 to 24 months.
Oh, interesting. No matter what the Fed does from here, does the rate picture matter for the bank stocks?
It does, because it provides the liquidity to sort of liquefy housing and corporate lending and bring spreads down. But I think the financial sector has produced visible earnings growth for a long time through these cycles, and they are trading like cyclical stocks. JPMorgan and Goldman should maybe have tech multiples, and so I think there's upside for financials.
They're aside from when the broadening started to happen on the idea of rate cuts, those were the type of stocks already that were leading this market along with the mega caps. This is a large cap stock rally, right? Industrials,
correct.
The biggest names out of the industrials, the biggest names out of the financials, the biggest names in tech were leading the way.
Yes.
You think that continues?
Yes, and because, at the end of the day, when you look at GDP, for every unit of economic activity, there's one unit of financial. So financials are half the economy, but they're not half the index. Now, I'm not saying they're going to get to half the index, but they really should re-rate. I mean, I think what we're, even this quarter, right, the numbers from JPMorgan, Goldman, and the financials, and look at the bullish IPO, these are all good signs to me that you want to be overweight financial.
Right now, the Bitcoin price is largely driven by the institutional adoption, ETF inflows, etc. And that's why we see when, for example, when anything happens around the macroeconomics, then the Bitcoin price is impacted heavily. So right now, I think lots of expectation is around where and when that the U.S. Fed is going to decrease their interest rate, is when they are going to do the interest rate cut, and that's where we have lots of ambiguity. So people don't really agree on specific time and whether it's like 25 bips or 50 bips in terms of the interest rate cut. That's when Bitcoin price can be, and lots of other altcoin prices are impacted heavily. So some of the recent dump are because of that.
A fascinating twist in Lee's thesis. He believes that banks may be one of the strongest plays over the next 12 to 24 months, not just tech. Financial institutions are poised to benefit as AI enhances profitability and blockchain adoption potentially unlocks exponential efficiency and multiple expansion, especially for major firms like JPMorgan and Goldman Sachs. Additionally, with the Federal Reserve's monetary policy and rate trajectory still under debate, financials delivering visible earnings growth may deserve premium valuations akin to tech multiples.
Focusing on Ether, the second largest cryptocurrency is in the red as well as of around noon today, after falling yesterday as well. On Sunday, however, Ether rose to a new all-time high above $4,900 after hitting an earlier record on Friday for the first time since 2021. Ether has been leading the crypto market for several weeks. So can you take us through some of the factors you think have been contributing to that dynamic? How much of it is a result of the new cohort of corporate ETH accumulators buying the cryptocurrency in bulk?
Yeah, I think some of the recent growth came indeed from what you point out in terms of the stock versus crypto kind of combination or integration. When companies like SharpLink and Tom Lee, individuals when they drive their order book or their narrative around the purchasing or holding the Ethereum. But why they do that and why the retail users still buy in that story, I think largely because some of the narratives came around when Ethereum network is becoming the essential network for all the stable coins global transactions like cross-border transactions, PayFi, etc., and also stable coin settlement happened. So if you think about all those USDT, USDC, USD1 stable coins transactions, where do they settle them? Of course, they have other options other than Ethereum, such as Tron, such as XRP, like Ripple networks. But Ethereum is still the largest platform or public chain for all those stable coin settlement to happen. And if you think about that, Ethereum's fundamentals is not just this crypto narrative. It's more about the takeover of Swift, of MasterCard, of like Visa, etc. So it's much more in terms of what it could be as a settlement network for the public chain. So I think that's largely the narrative for Ethereum. But of course, on the more surface side, when people want to buy Ethereum more by holding SharpLink and many other Ethereum-based public companies, it does make a lot of sense. Ethereum Foundation is growing large, it's growing a lot, but I think deep down, it's all about what people think Ethereum network can achieve.
So expanding on that, a rally for shares of certain companies that stock up on crypto as treasury assets has cooled dramatically in August. What do you attribute that to, and what does the pullback mean for these treasury companies holding crypto assets?
I think treasury companies, it does make sense because lots of companies such as, especially like endowment funds, institutional investors, as well as some high net worth individuals, when they look at their placement and allocations in crypto or in Web3, they probably prefer the more familiar format, such as a stock. For example, MicroStrategy or SharpLink, when they hold Bitcoin and Ethereum for the investors rather than for the investors themselves to buy Bitcoin and Ethereum themselves, and they need to think about how to store those cryptocurrencies and whether it's fully compliant and fully legal. So lots of risks that they can mitigate that they can mitigate by just holding some of the treasury companies. It makes a lot of sense. But whether this is, fully sustainable, I actually doubt that. I think the sustainability of those treasury company might be largely impacted by new regulations. So for example, one day when SEC or some other US regulators came out and say, you need to be more open and fully compliant about certain things, and it's not that easy to list any cryptocurrency or just by holding that cryptocurrency into a treasury, then that might be an ending book. Then lots of other companies who might want to just add different cryptocurrencies to their treasury book, that may not work anymore. So I actually expect that to happen maybe in 3 to 6 months.
While Lee's remarks in your text moved into broader territory, touching on crypto and Ethereum's surge, those fall outside the scope of his commonly referenced public commentary. However, they echo widely discussed themes throughout 2025. Macro dynamics, institutional adoption, stablecoin settlement dominance, and regulatory uncertainty all drive crypto pricing and volatility.